Run our business is a limited partnership composed by three general partners and one limited one. For our partnership, we have chosen the form of a limited partnership with the following reasoning. While all four partners equally believe in the business and its mission, there is a need to isolate one of the partners from the unlimited liability of a conventional partnership, as they are not able to be present in the day-to-day management of the business in the time coming. The choice of establishing a limited partner allows them to share their investment, knowledge, skills, and connections while facilitating a healthy departure from the company without endangering the day-to-day management of the firm. Among general partners, none are superior to one another, and no separation exists between ownership and control. All general partners have equal say in the management of the firm. Our capacity to generate value relies not only on external activities, but also on internal processes and intangible assets that are not acquired from external sources. For example, our knowledge.
Now I would like to talk about the assets that we need. Each of us partners invest 10,000 euros for a total equity of 40,000 euros. We need 81,850 euros. So then we ask for a loan of 41,850 euros from the bank. Here on this table, you can see all of our assets that we calculated. To start off, we need 2 billboards in total of 40,000 euros. And we need 2 solar panels in total of 30,000 euros. And then to open up a website, it costs 2,000 euros, and in addition to that, the software costs 100 euros. And then we would rent an office, which is 800 euros monthly, but we would start off by paying all of it all together, which costs 9,600 euros to us. And then we would need a van, which we would be also renting daily, and in a month it would cost approximately 150 euros. Here we can see our assets that cost 81,850 euros, our equity that is 40,000 euros, and our liability, which is our loan, 41,850 euros.
Starting from this basis and considering the entire lifetime of the firm, here are some of the most important changes analysis that have been made by the company, which enables its customers to pay for a service that allows them to appear on digital billboards for advertising purposes. So we start by investing our own money, then we ask for a loan to the bank, and we start by acquiring factors of production. We close the circuit of borrow loans by paying back the bank, and in the end, the firm regulates trade payables with suppliers. Then, on the ongoing process, we decide to acquire 2 more billboards and 2 more solar panels. The payment is for the 40% directly by cash and the remaining part by taking out trade payables with suppliers. Here, we simply evaluated the depreciation of our assets, of our durable factors of production, both in time T0 and in the ongoing process when we decided to acquire 2 more billboards and 2 more solar panels by using the straight line method. The last 3 transactions show the revenues from sales, including both services and durable factors of production. Finally, the firm closes and repays the owners for 372,037.5 euro. Here we are the income statement, so revenues minus expenses during the period T0 T-zeta, and the balance sheet in T-zeta, so capital in T-zeta minus capital in T0, that gives the difference, and our profit or loss. In this case, we have a profit of 332,037.5 euro. By using the third method, we have total income that is given by the difference between cash in and cash out for a total amount of 332,037.5 euros. Since we started our business choosing a limited partnership, indeed we had 3 general partners and 1 limited partner, we decided together that in case of net profit we will distribute the 10% of dividends to the limited partner and the remaining portion between the different partners. So here are the amounts distributed among the owners.
To measure our success and impact on local communities, we will be using multiple non-financial indicators. These will be employed to ensure responsible operation and growth of our firm. Our indicators have been picked to reflect our core values. The chosen indicators are relevant to our business and are specific and easily measurable. This will help us in evaluating whether or not our performance meets expectations. With dedicated work put towards them, these goals will be achievable for our team. Our non-financial indicators fall into 5 categories: customer metrics, employee engagement and development, environmental sustainability, technological advancements, and social and community impact. First, our customer metrics. Our customer metrics consist of client acquisition and retention, customer satisfaction, and market penetration. Performing regular surveys to measure our clients' level of satisfaction is key to understanding if the services we are offering is yielding the positive effect we intended to. Employee engagement and development will focus on training programs and performance hours of training, employee retention, and employee satisfaction. Recruitment, onboarding, and training are expensive procedures, and keeping close tab on these costs will help us ensure the health and safety of the firm. Third, environmental sustainability. Goals for environmental sustainability take the form of strict goals for our energy consumption and our carbon emissions. Minimal carbon emissions are at the core of our mission statement, and continuous monitoring of this is required to make sure we stay true to our path. Fourth, technological advancements. Measures of technological advancements push us to continuously innovate our product and push the boundaries for our market. We have a goal to implement mature, non-generative AI for purposes of data analysis within the first 3 years of business. Our goals will be clearly defined from day one, and our indicators will be used to make sure we reach those goals. But the indicators can never be set in stone. Continuous evaluation, monitoring, and adaptation of them will help us make sure they serve the values and mission of our firm.